How do you get the money you need to invest in commercial and residential real estate? Well, during today's training, I'm going to show you exactly how to do just that. We're going to probably talk about, I don't know, 8 to 10 different unique ways that you can get the money you need to buy, invest, refinance commercial and residential real estate. We're going to talk about ways you can get the money you need to fix and flip properties. We're going to talk about how to use business credit to actually get into real estate investing. We're talking about how to use business credit to actually build a credit profile and then be able to come in and get commercial real estate financing without a personal guarantee. We're going to talk about short-term and long-term loans for residential and commercial real estate financing. Look, if you want to get in and take advantage of the market that's exploding right now, well, I'm going to show you how to get the money you need to do so. We've got a lot to cover, so let's dive in. So purchasing commercial and residential real estate, there's 2 types of real estate, obviously, when we're talking about buying or refinancing, and that's commercial and residential. Commercial's obviously buildings of, I should say buildings, commercial properties of some sort. This is where businesses are run out of. This is apartment complexes, etc. And residential real estate's like homes, typically 1 or 2 unit homes. Sometimes you might find a duplex, for example, that still classifies as residential property, or you might just have a single home or a single condo. So that's really the difference between the two. Is commercial is really used primarily for more businesses or a lot of units in one place, whereas residential really has to do with more individual units or actual homes. So a lot of things you can do here. Okay, first of all, you can invest with the intention of renting it out. So when we talk about commercial or residential, we can basically come in residential. We call this a buy and hold. So I can go buy a property. I can potentially fix it up, repair it, hold on to it, just rent the property out through Airbnb or through another means like normal renting it for a 6-month period of time period or a 6 or 12-month time period, and have no intention of actually flipping the property. Okay, one of my very good friends, this is what she does for a living. It's all she does is she owns a ton of properties in high vacation traffic areas, and she Airbnbs the properties. And that's her entire business, and it's insane how much money that makes. As a matter of fact, we were just talking about that last night. She had a 400 square foot place, which is pretty small, 400 square foot that's renting for about $200 a night. So again, a lot of money that could be made just by buying properties and holding on to them. The same thing with commercial. A lot of times with commercial buildings, what we're seeing happening right now is that people are buying the properties that they're in. They're then have other people in those properties that are leasing other units, and they go from it being a cost for them to rent a place to operate their business to now they're making money because the mortgage payment is less than they're bringing in from the rent from the other people that are renting in those units. So for example, you have a strip mall. There's 5 different places in the strip mall. You occupy one. There's 4 other renters. Right now, we're seeing a lot of people go to buy that actual strip mall instead of renting their one unit and then make so much from the other 4 renters that it covers their expense, and then they're profitable from it being an actual liability or expense. So some examples now on the residential commercial side. Now, the other side here is fix and flip. And fix and flip is just what it sounds like. We're buying something that's run down, whether it be residential or commercial property. We're fixing it up, and then we're immediately selling it for an actual profit. We have no intention of holding on to it long-term and renting it out. We're just basically buying it with the intention of fixing it up and being able to flip it. And GQ2Fly says, I'm currently loving the Ultimate program. It's amazing so far. Congratulations on getting started. I'm really glad, and let us know what we can do to help you along the way to offering business credit financing. And thanks for joining us today as well. And hi, Valerie. Thanks for saying hello and coming in from YouTube. And if you're getting value throughout this, do me a favor. Just hit the like button, hit the love button. That tells the social channels we've got good information. They invite other entrepreneurs in, and it helps me help more people, which is my mission in life. Okay, so let's talk about commercial real estate loans. These are typically lent to business entities. So when we talk about commercial real estate financing, typically it's an entity. It's the business actually buying the property. Developers, corporations, limited partnerships, funds, and trusts. So this is interesting because this gives us the ability for a business to be able to qualify to buy the real estate without a personal guarantee from you. And we'll talk about that here in just a couple minutes. So both the entity has to have, or the entity has to have good financial credit rating. If it doesn't, then it's going to ask you to guarantee the loan. So this is very important because a lot of people don't realize all that you can do with building business credit. This is one of the big things. If you build a credit profile and score for your business that is strong enough and well-developed enough, you can actually come in and do things like buy commercial real estate in the business name without it even needing a personal guarantee. But if you don't do this, if you come in to buy commercial real estate without building your business credit first, they're going to ask you for a personal guarantee. This means you're personally liable for that debt that can come after your personal assets if you ever actually default and they don't make enough money on the selling of the real estate to be able to get their money. So this is a very important point. When it comes to building business credit, if you ever want to get away from personal guarantees, if you ever want to get away from signing as a signer for the debt your business is actually obtaining, the only way to do it is to come in and build your business credit. It's the only way. If you build your business credit, you can get away from personal guarantees. But if you don't build your business credit, then in situations like this where you could get away with no personal guarantee, you have to provide one because the company, your business, doesn't have a financial record. It doesn't have a credit history. And so then they lean on your personal credit history in lieu of the business having its own credit history. So one more important reason you want to build your business credit. And Chip Fly says, you gave me a virtual fist bump last week. That's awesome. I love virtual fist bumps. They're phenomenal. And what is it says, you talk fast. I do talk fast. That's the way my brain works. So hold on for the ride. The great news is that you're going to get a tremendous amount of information in a very short period of time. So hopefully you're patient with me on that. Okay, so commercial real estate loans. Basically, if this type of guarantee is not required by the lender, then we call this non-recourse. So on a loan where you actually get a commercial real estate loan, but you don't actually have to pay it back if you default because there is no, you don't have to be personally liable because there's no personal guarantee. This is called a non-recourse loan. You've heard that terminology before. Now you know what it means if you didn't already. That just means basically that the lender has no recourse against anyone or anything other than the property itself. They can come after the property. They could take the property. They could sell the property, but they can't come after you or your actual business if it's a non-recourse loan. Okay, so the terms of these are typically 5 to 20 years, sometimes as long as 30 years. Okay, and oftentimes the amortization is longer than the actual term. So what this means is it means that if you get a commercial real estate loan with a 5-year term but amortized over 30, it means they figure your payments out as if you had 30 years to pay them back. But in reality, you have to pay them back in 5 years. That's only an example. As you can see here, you can get commercial real estate loans for even 30 years. Commonly, they're 15, 20, 30 years. But there are bridge loans that are shorter term loans in between. So sometimes you might not qualify for a long-term commercial real estate loan, but you can get a hard money bridge loan for 5 years. Your amortization is over 30, which means your payments are still calculated as if you're paying over 30 years. So your payments are low, but then you have a balloon at the end of, in this example, 5 years that has to be paid back. So what that does for you is it lets you get the loan you need to buy the property, for example, and then it gives you 5 years to find another lender to refinance for the long term. Oftentimes, hard money loans or shorter term loans, they're just easier to qualify for. So you might not qualify for a 20-year SBA loan for commercial real estate property right now. You might not qualify. But in that example, what you could do is do the hard money loan so you could buy the property, fix what needs to be fixed so you can qualify for an SBA loan, then refinance out of the bridge hard money loan into a long-term loan. So that's just one example of many that I can give you where you're amortizing, your payments are calculated on a longer term, even though the reality is you have a shorter term to actually pay them back. So a lender, for example, might make a commercial loan for a term of 8 years with an amortization period over 30 years. And when the borrower would make payments over 8 years, it's actually payments calculated over 30 years. So a lot of benefits here when they're amortizing on a longer term and giving you a balloon because it gives you the time you need to get into longer real estate financing if you don't qualify for that initially. Okay, now the length of the loan term and the amortization period affect the rate the lender is going to charge. So depending on the creditworthiness of the borrower, these terms may be negotiable, but in a lot of cases, your actual interest rates you're going to pay is based on things like the credit rating of you or your business. And a lot of it has to do with the property itself. What kind of property is this? Is this a manufacturing facility? Is it a storage unit? Is it an apartment complex? The type of property you choose really determines, it has a lot to do with the actual interest rate you're going to pay. And so does credit worthiness. How likely are you to repay the debt based on your personal or your business credit profile and score? So though a lot of those things will actually determine the rate that you're going to pay. Now, Red Fox says, is it too late to switch to a virtual address from my home address? It's been 3 months. No, it's not too late at all. But important to note, Red Fox, if you switch to a virtual address, which is a good idea, you got to make sure that address is listed everywhere. As a matter of fact, you're better off to do it now before your business starts to be picked up and recognized by Yellow Pages, and by Yelp, and by Google and Bing and all these places. But just remember, you need to do a search to see everywhere your business is listed online and change that address. On all your offline records, your bank statements, your IRS records, your Secretary of State records, your Yellow Pages online, your social media pages, your website. Just make sure that you're doing that you're coming in and that you're changing your address on all of that information. So let's talk about interest rates and fees. Okay, interest rates on these loans and residential loans are going to also have, besides interest rates, you're also going to have fees you're going to pay: appraisal, legal fee, loan application, loan origination, survey fees. So again, how much you pay depends on where you go. Are you going to a bank? Are you going to a broker? What's the risk of the loan? What's the lender? But just some fees to keep an eye out for as well. Some costs are paid up front, and a lot of them are actually rolled into the loan. Whenever you're looking at the fees, you always want to look at the APR. If we look at an APR of a loan, an APR of a loan calculates in the interest you're going to pay and the fees you're going to pay. So instead of seeing fees here and interest here and trying to figure out how much it's really going to cost you, an APR really gives you a rate of how much you're going to pay overall, and with interest and with fees actually calculated in. Now, if investors settle the debt before the loan's maturity, well, then you got to see if there's a prepayment penalty. A lot of lenders in this space go one way or the other. If there's no prepayment penalty, you don't pay a penalty for paying the loan off early. If there is a prepayment penalty, well, then you are going to pay a penalty if you pay the loan off early. So something else to look for. Now, real estate crowdfunding is something that most people don't even know exists. And this is a phenomenal newer way to be able to get the money you need to actually invest in residential and commercial real estate. And so with this, what's happening is we're using a platform that basically connects you, a borrower, a real estate investor that needs money, and a backer, somebody that has money that wants to invest in real estate. So there's this whole world with people that have plenty of money. They don't feel comfortable with it being in the stock market. And what they want to do is they want to invest in things like real estate, but they don't have the time to invest in real estate. So what they do is they go to these equity crowdfunding platforms, these real estate crowdfunding platforms. They put up the money to people that actually have the experience and want to actually take the time to do the work to fix or flip the property or buy and hold the property. And you combine these two together, the person that wants to do the work can get the money from the person that doesn't. And that's the easiest way to explain how these actual crowdfunding platforms work. Most listings on these real estate crowdfunding sites are commercial real estate. You don't see a lot of residential, although there are crowdfunding real estate platforms specifically for residential real estate investors as well. And sometimes you could pay a fee as little as $5, or they need funding for real estate investment. Individuals can invest in real estate platforms sometimes as little as $500. So there's two things you need to know here. First of all, there's an investment opportunity for you here as well. If you have money that you want to get a rate of return on, you can invest money through these platforms, have somebody else go out and invest in real estate, and you get a rate of return. Or you can go to these platforms to get money and raise money from other people that have the money to actually give. So two ways you can work with these real estate these realty crowdfunding platforms. Now, real estate investors can fund their investments debt-free, but it's not free money. There are fees and profit sharing, so consider it carefully. Even though it's debt-free, it's possible for crowdfunding to end up costing more than a loan. So you've got to look up these things. So because, again, what's happening is you're ultimately giving somebody a rate of return on whatever you're doing. So you're going to lose a lot of your profit because you're sharing it with somebody else, but not a bad idea, especially if you're newer to the game, because once you flip 2, 3, 4 properties, you probably have enough money or cash to start investing yourself without actually needing this kind of money. But again, not a bad way to go. You're just going to give up some of your profits. Now let's talk about some of these platforms. Well, CrowdStreet allows you to invest online in commercial real estate property. You can choose between direct investing, fund investing, or managed investing. And CrowdStreet boasts over 101,000 different investors. So a great place to tap into to get the money you need. And they have over 260 commercial real estate developers as part of the platform as well. Direct investing is varied minimum investments. The minimum for fund investing is $25,000. The minimum for managed investing is $250,000. So this platform is more for professional investors. So it really is designed more for people that the whole thing is going to be managed for you, the newer people coming in. But again, if you want to invest into these platforms, into other projects, here's what the entry fees are. Okay, not the entry fee, but here's the minimum amount you need to contribute to get in. And again, you can get money from these platforms for the purpose of investing in commercial real estate as well. So RealCrowd is another real estate investing platform via equity crowdfunding, and it charges a technology access fee to the operating partner for their services. They don't charge investors any upfront fees, ongoing asset management fees, or promote or carry any interest in the investments. You can browse offerings before you sign up. The information includes minimum investment and average returns, and it allows for a lot of decision-making to happen. You can go to realcrowd.com. So these are two of the best platforms out there when it comes to actually getting money from a crowd to invest into commercial real estate. And we talked about hard money loans as well. These are really good loans when you just don't qualify for regular commercial loans. Remember when we talked about these earlier, we talked about these in the context that you're using these typically for short-term money to buy the property, then you'll typically refinance into longer term money like SBA 504 loan or something similar that's better for longer term, 20, 30-year term. These are oftentimes shorter term. They might be 5-year, 10-year term, amortized over 30. So they give you 30 years to pay to keep your payments low, or 30 years to average your, or they calculate your payments over 30 years to keep your payments low. You got to pay them back within 5 years or 10 years, for example. So these are typically for higher risk borrowers. They might be if you have credit issues. They may be if the property's really a mess and you need to do some work before you're going to get a regular mortgage on it from a place like SBA. Some lenders even offer these loans based on the after repair value of the property. So they'll look at what the property is going to be worth after it's fixed, and they'll lend you a percentage based on that. So for example, in the residential space, okay, we call these a lot of different things. But what it comes down to is this: they'll do 100% of whatever the after repair value is going to be. Okay, so how you can actually get, or 65% of the after repair value. So that could cover 100% of the cost to buy the property. So if you come in and find a property at the right price, they could give you 100% of the money you need to buy and repair the property, as long as you're buying it right and don't exceed 65% of the after repair value. So this is the way it works in residential real estate. When we look at house reseller programs or hard money loans, they're 8, 9, 10% interest, 6-month, 12-month terms. Okay, you can even get into some of these. We had some of these during our funding challenge, which you can still go to funding30challenge.com and access the playback videos from that. So at the Funding 30 Challenge, we actually had somebody came in that does these kind of loans, and you don't have to have any experience. So you could be brand new into investing into residential real estate, find the right property. They'll give you 65% of after repair value, which means if you buy it right, you can get 100% of the money you need to buy and repair the property. So hard money loans are available on commercial and residential real estate in a great way to bridge the gap, because you don't qualify now for SBA, but it bridges the gap and gives you 5-10 years to actually before you need to pay the loan off, where you can invest into a longer term loan or find a longer term loan for you. Okay, these loans are typically fast. I mean, you can get approved typically within 24 hours. You could typically fund in a week, sometimes in as little as days, usually 6 to 18-month terms, again, for residential real estate. These are really on residential side for fix and flip. That's what they're designed for. So they're designed to give you the money you need to buy the property, fix the property, then flip it. They're not really designed for longer term loans. These all actually are more of bridge loans, because again, they'll amortize over 30 years, but they only give you 6 months or a year and a half to pay it back, because if you're doing a fix and flip, you should be able to fix the property and flip it within that time period. So She Did community, this is amazing. Thank you for sharing your knowledge. I appreciate it. Thank you very much for saying that. And thanks for tuning in. I've never actually seen you on our live streams before. So thanks for tuning in on YouTube. So hard money lenders do not lend 100%. They want you to have money in the project as well, skin in the game. Typically, they're going to want you to have some money invested in the project, but you don't necessarily have to. Other lenders want you to have it available, and they'll have you put it in an escrow account. So of course, they love it when you have money in the game, skin in the game. So when you're putting money in, they love it. A lot of investors require that. Other investors don't require that you put money down, but they do require that you have money available and you put in an escrow account in case you ever default, that they can go take the money from the escrow account. So you typically need to have some cash for these. But again, there are other lenders that if you're buying the property right, you can get in with little to no money down, and they don't even require that you have a bunch of cash available. But again, they typically want you to have money invested or money in an escrow account in case you ever default. So and another thing I want to mention about these, you can have multiple of these at the same time. So once you come in, you can qualify for a lot of these hard money loans for residential property at the same time. So you could get 3, 4, 5 of these loans, own 3, 4, 5 properties that you're working on fixing and flipping at the same time. A lot of real estate investors do. So let me give you an idea of how this all works. A lot of our clients will come in and get a program called Credit Line Hybrid. Now, Credit Line Hybrid, you can get up to $150,000, 0% rates for like up to 18 months. A lot of the credit lines report to the business credit reporting agency, so they help you build business credit, and you could take the cash out of these credit lines at 0%. So what a lot of our clients will do is they get Credit Line Hybrid to buy their first property. They get $100,000, $50,000, $150,000, 0% rate, right? They buy the property, they fix the property, they flip the property, they make a profit. Now what they do is they come in and get one of these loans, and while they're doing this, they're building their business credit. Now they've done their first flip and they have cash. they'll come in and do one of these loans, whether they put that cash down or into an escrow account and qualify for one of these loans. Now they built up some business credit. They can get credit at Lowe's and Home Depot, etc. They use those credit cards for all the repairs that they need to fix the property or anything that's not covered here with the hard money loan. So with hard money loans on residential properties for fix and flip, they basically give you the money to fix the property. So you might not even need business credit, but some will use business credit. Some will use all the money from here. Then they sell the property. They make even more money. And then they start buying 1, 2, 3 of these properties at a time, getting more of these loans at the same time to be able to do fix and flips. So that's how a lot of our clients do it. They use Credit Line Hybrid to get in to buy the first property. Okay. And if you don't know about Credit Line Hybrid, you can go to creditsuite.com/get-funding to get approved or give us a call. I think our number's on the next slide. Then they have the property, they make a profit, they use the cash, and they come in and start getting these house reseller programs, which is what this is. And then they qualify because they have the money down to put an escrow or down payment. They do another flip, they have more cash, and they continue using these until they've accumulated enough cash and profit that they don't even need loans anymore. They can just go out and start buying the properties with cash and using business credit to do the repairs. So we help a lot of real estate investors. It's one of our top 3 industries we service. And I can tell you that's exactly the course that a lot of them use, pretty creative, to be able to get the money they need to actually buy. So you can also use business credit where you can come in, build a credit profile for your business, and then build a credit score. And as you're doing so, then that's going to improve your fundability and help you get other kinds of money. And again, as we talked about, you can then qualify for commercial real estate financing without needing a personal guarantee, without being a personal signer. So let me mention this as well. When it comes to buying and holding residential real estate or buying and holding commercial real estate, what they care about most is the cash flow of the property. That's what they care about. Is the property making money? Can the property service the debt? Is enough money coming in from the property now to pay for the actual debt itself? So again, back to that initial example. If you have a strip mall with 5 places in it, and you're renting one of the units and the other 4 rented to 4 other stores, right? Well, are those 4 stores making enough money to pay the mortgage and then some? If they are, especially if the rent on those properties is enough to cover 120 or 125% of the mortgage payment, then that is a perfect property. A lot of lenders want to lend on that kind of property. So just keep in mind that when it comes to getting money for commercial or residential real estate financing that you're buying and holding, what matters most is the cash flow of that property. If you get a property that cash flows correctly, you're going to get good terms and you're typically going to be able to get in with less money down. So some things to keep in mind. Now, by establishing business credit, you could build a credit profile and score that makes it easier to qualify for commercial real estate financing, makes it easier to qualify for other kind of financing, gives you credit cards like Visa cards, MasterCards, but also Home Depot, Lowe's, the stuff you need to repair and maintain properties as well. You can even get Visa, MasterCards, and cash credit cards as you build your business credit that you can use as well to invest into actual properties. So we work with a lot of different real estate financing here, residential and commercial, up to about $10 million when you're actually buying property. Okay, conventional property financing through regular banks, hard money financing, bridge loans that we talked about, and other loans for commercial real estate as well, including SBA 504 loans. Those are going to give you the lowest interest rate, typically 4 to 6%, and the longest terms, typically 20 to 30 years. And keep in mind that I know we're talking about properties, but you can use SBA 504 financing to buy equipment, to buy machinery, to pay for utilities, to pay for land, as well as commercial real estate. Any kind of fixed asset, or not any kind, but fixed asset financing is handled through SBA 504 program. So we handle a lot of those kind of financing. If that helps you at all, feel free to give us a ring at 877-600-2487. We'll do a free consultation. And we'll talk to you about all the commercial real estate financing or residential you may qualify for now. We'll also get your business credit reports with Dun & Bradstreet, Equifax, and Experian for free. They cost you no money with us. And then we will also do a fundability assessment to talk to you about stuff lenders care about that you might not notice and what to fix to become more lendable. So all of that is available for you as well on the free consultation. All you have to do is give us a call. Okay, so financing available for a lot of different kind of properties, office building, industrial facilities, light manufacturer, self-storage, mixed-use property, auto dealerships, as well as residential homes. So we can help you with financing with any of those kind of things through some of these programs and then some that we didn't even talk about as well. Okay, and you kind of get a double benefit. If we can help you at all, keep in mind that it never costs you any money to work with us. We don't charge any money to get loans or to help you through that process. Lenders charge interest rates. Lenders charge fees. We negotiate and help you get even a discounted rate because we do so much volume through these lenders, but we never charge you a dime of money to help. So again, if we can help you along the way to figure out what kind of commercial or residential real estate financing may work for you, all you have to do is give us a call. It's free to have us help you through this process. So to recap, there's a lot of different ways you can invest into commercial and residential real estate financing. We've talked about crowdfunding. We've talked about bridge loans. We've talked about hard money loans. We've talked about house reseller programs. We've talked about fix and flip financing. We've talked about buy and hold financing. We've talked about using business credit to handle a lot of the actual repairs on property. So a lot of different ways and creative ways you could do this. We talked about credit line hybrid to be able to take the cash out at 0% to be able to use as well. So don't forget, our job is to help you through the lifetime of your business get money. So if we can help you, feel free to give us a call, 877-600-2487. When you give us a call, again, we never charge you any interest rates or fees to actually help you through the process. Lenders sometimes pay us a referral fee. That's how we get paid. Sometimes they don't, depending on the loan program. Okay, but it never costs you any money to work with us. But keep in mind, lenders and credit issuers are going to charge interest rates, fees. Our job is to help negotiate that down to get you the best deal. Did you get value? If you got value, hit the like button. That's all I ask. Hit the like button, hit the love button. What that does is it helps you and I help more people. Just simply, it tells Facebook and YouTube, hey, this information has value. You should show it to other people. Other entrepreneurs come in. We get to help other entrepreneurs find the solutions they need. It's pretty rewarding doing what I do. So it's the only thing I ask. And don't forget to subscribe too. If you're on Facebook, YouTube, you can definitely subscribe and then get notified when we actually go live. We go live Tuesday and Thursday at 1:00 p.m. and 11 o'clock on Wednesday on Facebook, on Credit Suite's Facebook, on Credit Suite's YouTube, and on my personal LinkedIn profile as well, Ty Crandall. And don't forget, we've got daily tips on Instagram, Facebook, and Twitter, hundreds of videos on YouTube that can help you from startup financing all the way to SBA loans and major $10 million loans for expansion. All that training is there, training on fundability, building your business credit, crowdfunding, everything you need to know is there as well. And we got a podcast called the Business Credit Financing Show, 500,000 downloads, very popular. We're at like nearly 600 episodes. You can listen on the go, where we not only talk about business credit financing, but we have experts come in and talk about all facets of running a business, how to start a business, how to exit a business for maximum value, how to advertise and market a business, how to build your company's mission and purpose, all those type of things. So all of our social links are available at the top right of our page, creditsuite.com. And don't forget, you're entitled to a free consultation with us. If you give us a call, we'll get your business credit reports with Dun & Bradstreet, Equifax, Experian for free. They're $250 from the credit bureaus. We get them for free, give you tips and tactics to build your business credit. We also will do a funding assessment to tell you all the funding you can qualify for now. And then we'll also do a fundability assessment to teach you the things on your fundability that are messed up that you need to fix to become more lendable as well. And Mike says rental buildings, a great info. So for real says, I appreciate that. Mike, rental buildings, it kind of depends on what you're going to do. If you're going to buy a building for rent, then it depends on what you're actually buying. You're buying an individual building or an individual unit or a 2-unit, you're going to go more towards the residential real estate financing. And we talked about that as well. Regular residential real estate financing is mortgage. A typical mortgage is a 30-year loan on a 1 or 2 unit property. You start to get into multiple units, 3, 4, 5 units. Those really ultimately qualify for commercial real estate financing. So how many units is in the building you're buying will determine if it's residential or if it's commercial real estate financing. So when you're saying rental buildings, yeah, a lot of what we talked about today can work for that. It just depends on how many units are in the building to determine if you're going to go residential financing or commercial real estate financing. But either way, this financing we talked about today with bridge loans, hard money loans, it's all available for either one of those different scenarios. So if you have questions along the way, feel free to give us a ring, 877-600-2487. Don't forget you're entitled to that free consultation, fundability check for free, business credit reports for free, and to talk to you about all the funding you can qualify for now. So feel free to give us a ring, 877-600-2487. Thanks for tuning in. Don't forget to like and subscribe, and I look forward to seeing you on our next training where we talk about more cool ways to get money to start and grow your business. Have a great day.